So, in terms of preparing for 2026, you and I have been going super deep into the data. So, let's have a look at what the likes of SQM in their boom and bust report are predicting for the new year.
Now, what I love about SQM is they're not just picking numbers out of the air and throwing them out there. They're actually looking at what could happen to the Australian economy and how that's actually going to influence property prices. So there's 4 different scenarios, but for today, we're going to walk through the base case scenario, which is essentially a 25 to 50 basis point drop from mid-26, steady but sluggish economy, and inflation to sit between 2.5 to 2.7% as a yearly average. Now, at this base case, but all other scenarios are looking really, really positive for the Australian property market. But this one is one of the most bullish, where Perth property prices could rise between 12 to 16% in 2026. Brisbane's expected to go up by another 10 to 15%. Darwin up by 12 to 16%, Adelaide up by 10 to 14%. So those 4 markets are likely to see double-digit growth based on this scenario. Then we look at Melbourne with an expectation to grow by 4 to 7%. Sydney really similar at 3 to 6%. Hobart 4 to 7%, and then Canberra 3 to 6%. So the capital city average weighted across all of them, it's looking like the market should go up between 6 to 10% in 2026.
Now, I've been buying these reports for the last 10 years, and I've actually never seen a year where across the board, every single capital city in Australia is expected to do this well. But obviously, SQM's only one source of data. So what are our friends over at HTW in their month in review report expecting for the new year?
Now, as you can see, the HTW report is super bullish as well, with most property markets in the country sitting somewhere between the start of recovery and approaching the peak of the market. But the vast majority of the Australian capital cities are sitting in that rising market stage, with Adelaide, Brisbane, Darwin, Sydney and Perth all sitting in that rising stage. And then the start of recovery, we've got Melbourne, Hobart and Canberra. So what we're seeing there is some continuity between SQM and HTW. I don't have the numbers in front of me right now, but Domain also did a great article where they predicted property price rises across the board as well. So once again, everyone's feeling pretty bullish. Everyone's feeling pretty excited about the Australian property market as we move into 2026. And I think this is because there is a lot of demand at the moment and very, very little supply, and that's really driving up property prices.
Now, I love that both SQM as well as HTW are predicting good things for the capital cities, but what about some of the biggest regional markets in the country? How are they looking over the new year?
Well, SQM took a look at Sunshine Coast, Gold Coast and Mackay/Airlie. They were the only 3 regional markets that they actually put into this report, and their base case scenario was rises in those 3 regional markets. Sunshine Coast up 10 to 15% next year, Gold Coast 7 to 11%, and Mackay/Airlie region around 7 to 11% as well. So once again, some good growth there, and that's shown in the HTW month in review property clock as well. So according to their clock, it is saying that Sunshine Coast is approaching the peak of the market, and can feel that up here right now as well when you talk to people. There's still a lot of demand, but we're seeing the top end of the market really struggle at the moment, but there's still a lot of movement in that lower end of the Sunshine Coast markets. Now, Gold Coast is sitting in the rising market at the moment, and then at the start of recovery, that's where you have the Central Coast, Geelong down in Victoria, as well as Newcastle in New South Wales, are all at the start of recovery. And when we look at our data where it analyses the 1 year, 3 year, 7 year, 10 year and 18 year reports from HTAG, it is sort of looking pretty attractive in all of those markets as well, based on what could come, based on what's happened in the past as well. So it's always good to take a look at the data that we've got and the predictions from some of the Australian economists and analysts. But at the end of the day, a lot of this is very short-term focused. It's where are things at right now, or where are things going in the next 12 months? And you and I are long-term investors. Most of the people that we work with are long-term investors that intend to hold properties for 10, 20, maybe even 30 plus years as well. So what we're really passionate about is understanding more about longer term real estate cycles, where we're getting an understanding of the global economy and what's happening and how this could actually influence Australia, because we're so far removed from the rest of the world down here that you kind of need to have a peek at what's going on in the US, what's going on in Europe, what's going on in parts of Asia, and will that have any impact on us? So one of our favorites is obviously Phil Anderson, Akhil Patel, Fred Harrison, so many greats that are talking about this sort of stuff. So what are those guys saying about 2026 and onwards?
Now, when we talk about the global economy and long-term cycles that have literally been running for hundreds of years, both here and overseas, there's 3 books that I think are really worth having a little look at this year. This is by far the easiest one and my favorite, The Secret Wealth Advantage by Akhil Patel. I read this one a couple of times in 2025, and it's sort of like a playbook for the global economy over an 18.6-year cycle. So it talks about the different feelings, which is a weird thing to say as investors, that we have over the longer term cycle, how we feel when things are going great, how we feel when things are going bad. It talks about the different asset classes, including property, stocks, businesses and commodities over different stages of the cycle, and which ones win and lose based on history. And most importantly, it talks about hundreds of years of booms and busts in America and the UK, and sort of uses or leverages that information so that you guys can make better decisions this year and beyond. Another one which was a little bit harder, but the OG and one of my favorites of all time, is The Power in the Land. This one's been well worn. I've almost completely destroyed the cover here. This was from the great Fred Harrison, an economist in the UK, who looked at booms and busts over a 300+ year period and discovered that there is a method to the mania and the madness out there in the world of investing, and that we can learn from the past to make better decisions. And then off the back of that one, Phil Anderson, who is by far my favorite economist and commentator on global economic cycles around the world, and a good friend of both mine and Simon's, wrote The Secret Life of Real Estate and Banking. Now, the reason these books are so important for 2026 and beyond is we're no longer in a 2020 market where effectively all stocks, all commodities and all property prices around the country are going up at the same rate. In fact, after looking at over 4,000 suburbs at the start of this year and ranking them from most overvalued to most undervalued, we've actually found a massive split in the Australian market. So there are suburbs that we believe are massively and statistically overvalued, and others that are sitting so far below their long-term averages, it's not funny. And what's crazy about that, it's the same with some of the capital cities and major regional markets around the country.
And why we believe this matters is because we talk to so many investors, and I've unfortunately heard so many sad stories of investors that have accidentally bought the wrong market or the wrong suburb at the wrong time, and they've missed out on a massive opportunity. And at this stage of the real estate cycle, there is a heightened level of emotion. There is a lot of FOMO, fear of missing out. There's a lot of greed. People are trying to make up for lost time. And you're going to hear a lot of stories, a lot of success stories from people that did get started a few years ago. You know, people that have gone out there to parts of Brisbane or Perth or Adelaide that have made an insane return on their investment. And so some people invest into those locations thinking that the future is going to look the same as the past. And this is a huge trap that investors fall into that could cost you hundreds of thousands of dollars, if not millions of dollars in the long-term future, not even to mention the psychological impact of failing as an investor. So the reason that we want to make sure that you're aware of which markets are overvalued, which markets are undervalued, and the markets that we like the look of at the moment is so that you can move forward with confidence and go out there and achieve your goals.
You know, I completely agree with where you're coming from, which is why in 2026, the fundamentals absolutely matter for the decisions you make. And obviously there's about 150 of these, but the big rocks that are important for you guys, regardless of whether you're buying your own home, an investment, or working with a buyer's agent like us, is really to look at houses and townhouses, because as we all know, the power is in the land, in quality metro markets, as well as the biggest regional markets around the country. So for example, in New South Wales, that would be Sydney, Newcastle, Wollongong, Central Coast. And following those fundamentals, following where the infrastructure is, the population is, the job growth is, and the big money is a surefire way to not make the mistakes of people, particularly at this stage of the cycle, this late in the cycle, chasing mining towns. We also love properties as close to the city or the beach as you can afford. Now, that's pretty rough if you're looking to buy Sydney this year. Obviously, if you want to be within 20 or 30 Ks of the city, you're talking about 1.5 million bucks plus, or if you want to be in striking distance of any of those beaches, you're talking 2 to 5 million bucks plus. But when you start to look at the likes of the Brisbanes and the Melbournes in comparison to that, there's still phenomenal value out there. And on top of that, we always like the bigger pieces of land in the best parts of the city and the highest quality suburbs that we can afford. So we're asking for everything as per usual.
I was having a bit of a laugh in my own mind about that. I'm like, we're not really asking for too much, are we? But at the end of the day, it's like we're investing. And when you're investing, it's based on logic, it's based on history, it's based on fundamentals. And the reason that we keep on flogging that dead horse is because these are the things that really matter. And at a time like this, people are going to get caught out thinking that that shiny brand new object is the beautiful thing with the nice brochures and the nice online marketing and the great sales tactics that people use to get you into those off the plan units and some of those house and land packages in suburbs that don't have those underlying fundamentals that you were just talking about. So it's more about just understanding what history has told us works time and time again, and avoiding the things that history has told us do not work.
So as per usual, with all of our crazy OCD, we've completely overanalyzed the market again running into 2026. And if we look forward, what are the markets that you like the most at the moment?
Now, after doing all of this research, there's a bunch of markets that actually look really attractive. And within those markets, there's a whole heap of suburbs that you can look at too. Now, at the end of the day, we are all forced into a particular budget, whatever the banks are willing to safely lend us to purchase a property. You know, I don't think many people are going out there in 2026 and paying 100% cash for their properties. So if you are getting a loan from the banks, you're going to have a servicing limit. And so if we look at a budget of say $700,000, you know, you can't really go out there and pick and choose anything at the moment. It definitely prices you out of quality assets in Sydney, in most parts of Brisbane, in most parts of Perth and Adelaide as well. And so what it leaves us with is Australia's second largest capital city and some of the largest regional markets as well. So that's Melbourne, down in Victoria, Geelong, just south of there as well, also Bendigo and Ballarat, where you've got a bunch of different options up to $700,000 that you can analyse. And you could buy a property really close to the Melbourne city for that price.
You know, so there's a lot of people out there with that 700K or below budget at the moment, a lot of first home buyers at the moment, a lot of first time investors out there too. But what if you've got $1 million at the moment? What would you go out there and buy?
I feel as though as that budget goes up, it does become more complicated to figure out what you can do because there's so many more options that you can afford to buy. So at that $1 million price range, there's some really good opportunities in Brisbane, down on the southeast beaches that look really undervalued at the moment. They just haven't seen the same growth that areas closer to the Brisbane city have experienced over the last 5 or 10 years. There's even some options up here on the Sunshine Coast as well. There's heaps of population growth up here right now. Lots of really great infrastructure growth. You've got that $5.5 billion railway that's coming up from Brisbane and coming into the Sunshine Coast, which is going to be huge for the market up here. And then even with $1 million, you could look at the Central Coast in New South Wales, even parts of Wollongong as well. Definitely down in Melbourne, you'd be able to get really close to the city with $1 million. But I love those southeastern beaches down towards Mornington, as well as the southwest down towards Geelong. There really is a lot of options at that $1 million mark.
Now, if you're thinking about continuing to build your property portfolio with confidence and working towards financial freedom in 2026, and like us, you love the east coast of Australia and you'd like to buy in New South Wales, Victoria or Queensland, then Simon and I would love to offer you a one-on-one strategy session. To book it, all you need to do is go to www.pumkedonproperty.com, click that free strategy session button, and we can talk about where you are right now. We can talk about where you'd like to be longer term. We can educate you on the best capital cities and the best regional markets over here on the east coast of Australia, and then you can go and absolutely smash that and nail it on your own, or you could potentially become one of the small number of clients that we choose to take on each week. But either way, we want you to have an amazing year. There is certainly some blood in the water out there if you know where to look, and some phenomenal investments that are way below their historical averages. So good luck.